Australians are quite familiar with infrastructure investing, following a number of government privatisations many years ago. However, listed infrastructure is a concentrated sector here, with only about a dozen companies trading on the ASX, mostly operating toll roads, airports and utilities. In contrast, there are over 350 stocks to choose from in the global listed infrastructure universe, across both developed and emerging markets. These companies operate in a wide range of infrastructure subsectors, many of which are not available in Australia, including wireless communication towers, satellites, data centres, ports, bridges and even tunnels. Also, the global listed infrastructure sector is roughly twice the size of the entire Australian share market, and yet it is still relatively immature, with lots of privatisation opportunities yet to come. For example, none of the airports in the United States are listed on stock exchanges yet. But for us, one of the key reasons for Australians to invest in global infrastructure is to diversify and provide some overseas exposure in a relatively conservative sector. Diversification is achieved because the sector has a low correlation with the Australian equity market and generally provides some protection when the ASX falls sharply. An example of this was the onset of the COVID crisis. In that chaotic March 2020 quarter, when the Australian equity market dropped by over 23%, Argo Infrastructure's net asset backing fell by just 7.3%. In part, this was due to the resilient characteristics of many infrastructure companies, such as utilities, but also because Argo Infrastructure benefits from a falling Australian dollar, which often occurs in risk-off markets, as our overseas assets become worth more in AUD terms. For more information about global listed infrastructure, please see our website argoinfrastructure.com.au.